So today our topic is support and resistance. There are so many members, they are very weak in a support and resistance, how to draw, and even they don't know how the support and resistance is developing. Okay, so when we know about the support and resistance and how it's developing, then we will understand when it will work and when it will not work. So it's very easy to understand the support and resistance. So in the market, how the market is moving. The market structure first we understand. That is very important. The structure of the market is based on the supply and demand. It means when the supply is more than the demand, market will goes down. And if the demand is more than the supply, market will move up. So when you see the reversals, all the reversals are based on the supply and demand. So when the previous levels are the new levels, when they work in, sometimes not working, it's all about the supply and demand. When demand is more than the supply and there is no chances of the supply, then every level, every resistance can be broken. When there is more supply, there are no buyers in the market, there is no demand, every support can be broken. It's not necessary that each and every support and resistance level can be respected. No. How we can understand the supply and demand? First, you look at, there are some pictures I want to show you that you clear your mind about the supply and demand and what's it and how the trend are creating. So look at here. It was suggesting. Here it's suggesting that the supply and demand is on the balance. This supply or this demand are equal. When the equal, what you will see in the market, you will see the range, you will see the consolidation market, you will see the congestion of the market. When the supply and demand is equal, when the buyer's power and the seller's power is equal, you will see the price on moving in a flat direction. And when the next picture you see here, in this case, the demand is more than the supply. It shows the direction. Here, this is showing the supply, very less supply, but the demand is more than the supply. The buyers want to buy, but their sellers are not available in the market. They don't want to sell. It means supply is not available in the market, but demand, the buyers want to buy, more buy. So if the buyer side is greater than the seller side, you will see that this direction. And in this direction, every resistance will be broken. Every resistance will be broken. No resistance will be respected. Because of there is no supply in the market. We will identify in the market how. I will tell you. When in this, the demand is increasing, same, the supply is decreasing. So same thing. You can take from the both concepts, increasing demand or decreasing supply. And on the next picture, look at, the demand is now decreasing and supply is increasing. When the supply will increase and demand decrease, every support level can be broken, can be broken, can be broken. Because of the demand and supply. Market is moving on the supply and demand rule. There is no other science. There is nothing. If you are confusing with the concept, why the concept are not working, or you are looking for any secret, that if maybe there is a secret of the market, or maybe there are some market makers, they have a secret, only they know how the market is moving, and they know all the entry points where the market will start in up direction, where the market will start down direction. No, there is no any education, there is no any secret. All the secrets, all the information is based on the supply and demand. We need to know how we identify the supply and demand. The supply and demand we will identify from the volume profile. In the base of the chart, you see the volume. That volume, what suggesting you? That volume suggesting you the interest of the buyers and the sellers. When you see the price is moving up and also volume is moving up, you can understand there is more demand than the supply. The buyers are interested, they want to go up, so every resistance can be broken. When you see the sellers are moving down and the volume is increasing, it means there is more supply, there is no demand, every support can be broken. But now we are moving to levels, how they are developing. There are two types of support and resistance. One is the proactive, one is the reactive support. Reactive support and resistance and proactive support and resistance. Okay, I'm here. This is very important. So in the support and resistance, the cause of the support and resistance is supply and demand. Now you keep in mind that the levels are developing because of the support, supply and demand. There is only, this is a way of the support and resistance developing. First, you understand here. When the price moving up, it means demand is high than the supply. That's why the price is moving up. Now here, we understand that from the volume analysis, the volume is slowing down. It means the demand is decreasing. Price is moving up, but demand is decreasing. Now we can understand in the near future, supply will incur in the market. Supply will come in the market. So when you see that there is no demand, there is no interest from the sellers, also the buyer's candle will showing you the losing control in the market, very weak uncertainty in the market. That is a sign that now demand is decreasing and supply is slowly increasing. When the supply is slowly increasing, you will see these type of wicks in the buyer's candle. Look at here. High demand. Supply entered in the market. Supply, 75% supply entered in the market. Very less demand. Supply is increased. So this is a identification that the market is losing the control, market is losing the interest from the buyer side. Buyers have no demand at this point, and slowly supply is coming in the market. And when supply entered in the market and the buyers are getting so much weak, the price will reverse from here. When it will reverse from here, it made a level. This reversal level, when the price is decreasing from here, from this, the last closing price, when you see the price is moving down like this one, the price is moving down from this point. So this reversal point is a resistance level. So resistance is created because of the supply increased, demand decreased. Demand is here 0 and supply is greater than the demand. The market moving down, the resistance level created. The resistance level created. And now market is moving down. Here what we are looking, the slowly demand is coming in the market. Demand is coming in the market. So here we see that the demand is greater than the supply. It's looking, the sellers are getting weak. It means the supply is getting weak. Now the slowly the demand is increasing in the supplying candles. So these candles what showing? These candles showing that the slowly demand is increasing. As much as sellers are selling, as much the product, as much the currency quantity is available in the market, but this lower wick suggesting that the demand is more than the supply. That's why you are seeing that the buyers have a wick. When you see that the wicks are increasing in the market, you understand that the now in a few minutes, the demand will be higher than the supply because supply is showing you weakness. When the market is reversing from here, when it reverses from here, so this level is what? This level is suggesting you here the supply is zero, demand is greater than the supply. That's why the market is moving up. So demand is what? The buyers want to buy. Supply is what? The product is available for the sale. The currency, the quantity is available for the sale. When there is not availability of the product and buyers want to buy at any cost, you will see that the buyers will move up. They will seek where the supply is available. They will move to that area where the supply is available. So they have like this type of, they need a supply from the sellers, but there is no supply here and buyers want to buy at any cost. When they know that the supply is here, they will reach this area. And when the buyers buy and fulfill their demand, and demand is now all they purchased, but now there is no desire to buy. It means now there is no desire. When desire is not, but there is a supply, so the sellers want to sell. This is available here. The product is available here, but there is no desire. Now desire is here. On this price, the sellers know that the desire is here. The price will fall down, down, down. And when the desire, they purchase, the demand purchased, supply totally decreased, again market will move from here. So these reversal points are the support and resistance levels. So these type of levels are what? These type of levels are the reactive support and resistance. The reactive support and resistance can be taken from the past support and resistance level, can be taken from the engulfing, can be taken from the hammer, can be taken from the any price action pattern, can be taken from the round number, can be taken from the past support and resistance level where the market make a swing high, swing lows. These all type of support and resistance which we are using in the market, that is a reactive support and resistance level. How to trade on the support and resistance, that is another thing. How to draw the support and resistance, that is another thing. But now how it's developing, I'm talking on the developing, that is the way. So now you can understand when the buyers are getting weak, this level, maybe if there is a reactive level, that will be respected. If the sellers are getting weak, this level will be respected. But if you see in the market, there is no weakness here. There is no weakness in the demand. Then how you can expect that there is a resistance and this resistance level will be respected? No, this resistance will not be respected. The buyers will break the level because buyers are more stronger and there is no supply. When there is no supply, how the market will move down? There is a question. The market will move down when there is a supply, but I am not seeing any supply in this area. When I see this long wick on the candle, then I can understand, yes, now there is a supply here. Now I can expect from this level, the buyers are losing the control, they are losing the demand, and they don't have a desire to buy more at this price because buyers always want to buy at the premium price, like a cheapest price, and sellers always want to sell at the highest price. But this is now showing that the buyers have no demand and the sellers want to sell here. That's why you got a wick here in the candle. Now you can expect the market will move down, down, down. When you see these type of wick again, and there is a support level, and if you see this type of wick on the support level, then you can understand, yes, now this support level can be worked. But if there is no wick or like very weak wick, so how you can understand that this support will work? No, the supply is stronger, the demand is not showing. The demand is showing from the lower wick. If the lower wick is you are looking at the candles, every candle have a lower wick, lower wick, lower wick, then the buyers will enter in the market. If there is no lower wick, the buyers will not enter because there is no desire in the market for the purchasing. So this is a way which support and resistance will work and will not work. If you see the weakness in the candles in a direction and you see the another party is showing the interest for the selling, like in these candles, like here, then you can understand this resistance can be worked. Okay. So when we understand the reactive support and resistance levels, now we are moving to the proactive. What are the proactive support and resistance? The proactive support and resistance levels are those levels which we predict with the pivot points, which we predict with the Fibonacci levels, which we predict with the Muri math. So there are so many other types. So there are so many other ways when we analyze total volume of the market, total price movement of the market, and we divide with the, there are so many formulas for the getting the answers. Those answers give us an idea. This is the resistance number 1, this is the resistance number 2, this is the resistance number 3. Now it's suggesting that maybe these resistance level can be worked. Like a Fibonacci is a very, very good example. So Fibonacci level is not an accurate support and resistance, but that is a predictive. So that we can say that is a proactive support and resistance levels. Trend line are the proactive support and resistance line. Trend lines are not the reactive. The trend lines are the proactive support and resistance line. So now, after completion of this proactive and reactive support and resistance, now I am talking on the biggest mistake of the traders when they are drawing the support and resistance, and they are on the drawing of the support and resistance, they are making so many mistakes. When the level is wrong, then don't expect this level will work or not work. Look at here. The first and basic example, market is an uptrend and they are looking for the horizontal levels. Market is in an uptrend and they are looking for the horizontal levels. That horizontal level will work because if we see that there is no price action here, there is no price action here, there is no price action here, and market is moving in this direction, and they go for the 1 hour break or 2 hour break to find out the swing high and swing lows, and they are expecting that the previous after 2 hours before there was a swing high, there was a swing low, that level will be respected because these levels you can take from the horizontal levels. These levels in the after before 2 hours before, you are thinking that these levels will be working. No, these levels will not work. That is a big mistake. The market is making a trend and market is moving in a channel. When you see the market is moving in this space, same this line, pick and draw on the these type of levels. You will see when market is moving on this level, it will be reacted and reverse from here. Again goes up, again will be reversed. Again goes, again will be reversed. So in a trend, only trend line support, the diagonal support and resistance will work. The horizontal support will not work as you are thinking, as you are expecting from the horizontal support and resistance level. So in a downtrend, you just draw a level from the this level, these type of levels, these point connecting points, and clone this this trend line, again draw on the lowest level. So these levels will be respected because market is moving in a channels. But in a trend market, in a ranging market, your horizontal support and resistance will work, the trend line will not work. The horizontal support and resistance only will work on these type of ranging market in the consolidation market, but the horizontal level will not work in a trend. So that is a big mistake, and there is no price action pattern on the past, so the traders are very confused that how we can get a support and resistance line. There are so many questions daily I'm getting from that they're saying, sir, there is no price action past, how we can take a support and resistance level. Only the trend line will give you the clear idea. I will show you so many examples here about the trend line support and resistance here on the chart. So if I say the market is moving in a trend from here to here, the market is moving in a trend. So this trend line, you can see that it's working here. Okay. Now I'm not doing anything. Just I am going to copy this trend line and I put on this reversal. I'm looking that that is a reversal. If I am here, from here to here, market is here. In a market, in a running market, if we are from here to here, we have these 2 points. We don't know there will be the point or not point. We are just getting this point to this point. There is a reversal, there is a reversal. Highest reversal we will take. I just to clone this one. Look at. And I put a level here. Now tell me, when the price move this level, it's give us a reversal. When price move this level, it give us a reversal. When price will move and touches this level, it will give us a reversal. When the price leave the channel, you understand now this channel will not work, the new channel will work, or maybe the ranging market you will see in the market. So there are so many concepts about the trend lines. So again, I will show you the example. Look at here. I'm taking these 2 levels. From here to here. These are the levels, okay? These are the levels. I just to clone this one and draw the here on this reversal. Every time this reversal will be working. Every time this reversal, market will take a reversal from here. And when reaches here, the market change the direction. Again, this is the level. Look at here. From here to here, I am taking a level. From this point to this point is respecting, this point is respecting. And now I just to clone this one and I think it's wait. Clone and pick a level on this one. Look at, I just to draw here. When the price reaches here, reversing. Price reaching here, reversing. Price reaching here, reversing. Again, it's coming in the channel. So price will sometimes break the channel, again will come to the channel. So now look at here. When price reaching on this channel, it's giving us a rejection. So this is the way. When the price broke the level of the trend line, it's make a range, again moves up and make another channel. Market is moving in another channel. So now how market is moving? In this channel, again moving in this channel. So these are the 3 channels in the market and moving and respecting each and every level. So now you don't need so many levels to draw in the market. There are the few levels, 2 levels only make a channel. Every market is following with the channel and it's respecting the channel. So when you see the ranging market, the channel will not work. Here, there is no reversal here. Okay, so it's a ranging market here. There is no reversal. One example I gave you. So in this level, look at here. From here to here, you take any level because there is a reversal, clear reversal here. Okay, so just to clone and go draw here. When you see this reversal area, when it will broke, when the price come near to the channel, you expect a reversal. The market will not break this channel. Market always moving in a channel. Correct yourself. Always moving in channel. It's not moving down like a steep direction. No, you will never see this type of direction in the market. Market always moving in a channel. When the channel is broken, you again find another channel. Wait for the new channel. What the market is giving you the channel. So channel trading is very profitable in the market. And now there are horizontal levels. I'm talking on the horizontal levels. So the basic concept, and I described more than 20 concepts about the support and resistance level in the courses. And all courses, all the people you have access on the price action course. In the price action course, I describe all the 20 concepts of the support and resistance levels, where to draw, how the breakout give you a level, how the doji candle give you the support and resistance, how the round numbers working as a support and resistance, how The swing high, swing low give you the idea about the support and resistance. So all the concepts are described in the price action recorded courses, and every member have access on these type of courses. And I know every member have a course. Every member have a course. So you just to listen, watch, note down all the things when it will working, what I am talking about the support and resistance and how they are working. So, and on the next point, I'm talking on the support and resistance level. How to draw, I will cover it. Okay, little bit I will cover it, how to draw the support and resistance. First, I give you all the concepts which are very new and which are very effective. So this trend line is very important. You adopt this tray. This is a very good way for the support and resistance level. And then the comparison of the volume of the support and resistance level. So if you see there is a level any, these candles are not looking weaker. These candles are stronger. When you see that there is a level in the back, horizontal level, and if market is, look at, if market is, this is the level also here. Right on the level, market closed, okay? On this level, on this shooting star, the candle closed on the level. Why it's not respecting? You know that market break any range here. There is a clear breakouts. The candles are very stronger. The volume is increasing. The candle is the bigger candle. So why it will respect? Because the demand is increasing. When the demand is increasing, there is no so much rejection on the resistance level that you don't expect a reversal here. Why you are going against the market? Why you are not thinking that I can continue from here because the demand is increasing? Why we are taking the reversal trades? So this is the habit of the beginner trader. Always he is looking for the reversals. And when you talk with the pro traders, like professional traders, always they will give you idea why you are not looking for the continuation trade, why you are looking for the reversal trades. What's the happen with the reversal trading? Why reversal trading is not a good trading? It means we are going against the market. Remove this idea from your mind that we are taking only reversal trades. No, you make an idea how to trade the continuation pattern. So in a trend, the sellers will help you. If you made a simple mistake, the buyers and sellers will cover your mistake if you are trading in a trend. Don't take a reversal trades. They are very harmful in the trading. It means you are alone in the sea and you don't know how to swim. The reversal trading is like that. Don't take a reversal trades. And if you understand the market, the weakness and strength from the volume, and if you understand the support and resistance levels, and then the strength and weakness in the market, then you can take a reversal trade because you know the way when it will work and when it will not work. When you don't know the way, then don't take any reversal trades. So here, the basic support and resistance concept and the color change, it's very attractive in the market. When you see the demand was increasing, but now the demand is decreasing, supply is increasing. The second candle, the red candle, opening price is your first resistance level. This is your first resistance level, and that is your second resistance level. The wick is higher in the second candle, or if the wick is higher on the first candle, that will be your second resistance level. And whole this area, we can say it's a range of the supply. So supply can be again appear if the candle is closing inside it, maybe the supply will appear. But when the supply will appear in the market, it will give you the sign. If there is no sign of the supply, it means these sellers not necessary the next time they will enter or not. So it's not necessary this will be working or not working here. So the way of the support and resistance is only the basic way is there. You take a second opening price of the candle where the market make a direction, and the higher wick of these two candles, if the upper wick higher in the red candle, you take a level here. This will be your range of the supply in a buyer's trend, like here. So this one be the open price of the buyer is your first support, and the lower wick of the candle. So this is a similar wick. The seller can have a lower wick. So this is total your range of the buyers. So this is a demand zone. Maybe the next time buyers will enter in this. Look at when the sellers enter in this demand zone, the buyers enter there again. When the sellers break the demand zone, showing the activeness from the buyers are active, and it shows you that they enter in the market. So that is the way. And now I'm talking on the base, very important topic. That is, someone is asking, someone is talking with me. Okay. I will give you chance about the question. Okay. So just I cover all the topics, then I will give you chance. So now, the way, there is a rule, because market is moving with the rules. If you know the rules, then you will understand when the support will break and when the resistance will break, and when the support will respect it, when the resistance will respect it. How? The buyers and sellers have a 3 rules, 3 chances. If you know that the sellers are closed on the resistance level, support level. So every trader, he will expect that the market will reverse from here. But no, it's not necessary that market will reverse from here. So reactive support and resistance. I told before in the starting of this support and resistance topic, there are reactive. So reactive support and resistance have a rule of the open gaps. There is a rule of the open gaps. So open gap is what? The next candle open from below the closing price or above the closing price. So there are 2 open gaps. The one open gap is this one. The another open gap is this one. If you see on the support level, the red candle closes and there is a rejection from the buyers. If you see, if the candle changing the entry point in an open gap down or open gap up, you understand that the sellers will break the level. Buyers will not enter in this market. This is a rule. Sellers want to break the level, they can break. They can break. If you see here, this is a support, and there is no gap in the opening and closing price. The market will move up. It will be respected. So only the one way is there where the support level will be respected when the next candle close on the same closing price where the previous candle closed. If the next candle open from the same level, then you can expect there are 90% chances that market can goes up. Still that there are no 100% chances. Why there are 90% chances? I'm going to tell you. So this is the only way. When the closing price and opening price is the same, then market can move up. Otherwise, if there is an open gap down, open gap up, the 90% chances they will break. Only the 10% chances they will reverse. But 90% chances they can break this support and resistance. So why I'm saying this is 90%, this is 90%. The 10% I'm going to clear now. So there are 2 scenarios in the market movement here. This is the first movement scenario where you are looking at all the candles are stronger. When all the candles are stronger, buyers will not enter, because buyers only enter when the sellers are getting weak. They are waiting because there are so many speculators in the market. The sharp trend in the market for a 5 minute, for 10 minutes, these sharp trend is made by the speculators. These sharp trend not made by the traders. Only the market, in the forex market, there are some speculators. They want for scalping for 5 to 10 minutes. That's why the market is moving up. So that is a pressure from the speculators, not from the traders side. And look at here. If these three candles are stronger, don't expect the market will reverse from here. When you see the candles are getting slowly, the momentum is going to slow down. Now they close on the support level. Then this will be respected if there is no gap in the price. If you see the weakness in the market, then you can enter. If you see there is no weakness in the market, this support level will not work. So that's why I'm saying the 90% the support level will work, but the 10% it will not work. So 10% is a strong movement of the candles, the strong momentum of the candles. So if you see the strong momentum, then this support, if even the candle is closing and opening on the same levels, even the support will not work, because the strong momentum. If the momentum is weak, then support will 90% work. And these levels, here I said that 90% these will open gaps will work and 10% it will not work. Yes. Okay, I'm going to clear here now. So when there is a gap, open gap here. Okay, just wait. The candle opens from here. Now that is the first second of the open. Now we don't know this candle start from the support or start from the resistance level. So when they made the open gap, they will choose a level. That level can be support, that level can be resistance. So the sellers need a resistance. Always the sellers will start from the resistance level. If there is a resistance level and they start from below the resistance level, then you can expect the market will move down. If on the candle there is a support on the gap, like this support, this round number is like a support, and the candle start from here, then market can move up. So we are looking always that the gap, open gap, is start from the support or start from the below the resistance. So when the price is below from this support level, that will be called as a resistance, and when the price is above the support, above the level, so this level can be called as a support. So this is a 10% chances. These are the 10% chances. If the market close open from the support level, then maybe the market can goes up, because there is a pattern in the forex market. That pattern is a Pearson line pattern. So Pearson line pattern can be happen when the bias start from the support. If there is a level in this candle, so these are the 10% chances in the market to make a Pearson line pattern, and 90% chances the market will goes down. So I made so many videos on the support and resistance, and all the support and resistance videos are uploaded on the YouTube. And every time on the price action, I am talking on the support and resistance. Only there are few patterns, but whole the course is depend upon the support and resistance. So you need to watch each and every point of the video. It's full with the information, and you will understand how to trade the support and resistance levels. So these are the basic concepts. These are the simple mistakes what the trader they are doing. Always use the trend line in a trend and horizontal line in a ranging market. So I finished here, and some members they're asking that they take a live trades. There are so many videos on the YouTube where I'm trading on the support and resistance. You can watch these videos, and I will share also. I have so many videos. I will share with you how to take a support and resistance trades. So if now there's any question, then you ask me.
I have a question.
Yes, brother.
Regarding the channel trading, you are talking about reversal. So how many times we can expect a reversal from channel, and if the reversal happen, for how much minutes it will go up or down?
Yes, brother. Now we are on the 1 minute trading, and we can expect how many candles moves up, how many candles make a trend. So I think sometime if the trend is so much in an uptrend, it can goes up for the 1 hour, 2 hour, 3 hour. Okay, so sometime The 1 hour candle goes up. I'm going to show you, sir. You will be clear. Yeah. You can take an idea about the here just I show you impulsive wave and corrective wave. If you see there are 3 impulsive wave in a row, then you can expect the channel can be broken now. From here to here, that is a channel, okay? That is a channel. So you count the impulsive wave in a channel. And when you made a channel, it will give you idea about the movement. So now this market is moving in a channel. So this is counted the first impulsive wave, corrective wave. Again, first impulsive, second impulsive wave, corrective wave, impulsive wave. Now the corrective wave broke this channel. Now you understand the trend is inner fear. So in a channel, you will identify very clear which is the corrective wave, which is the impulsive wave. When you see the breakout of the
time will be better for us.
Yes, brother.
2 times entry will be better for us. Like
Yes.
We should not go
yes, 2 times, because on the first reversals you are taking the trades, or you are taking the levels, okay, and then you can expect again 2 trades are very good for the trend in the trend line. And Amin Saab, look at here.
Yes.
When you see that market is moving in this channel here and in this channel, look at the volume. Look at the volume.
Okay.
The volume will guide you. The buyers want to enter, the sellers want to enter or not. You will see the upper wicks and peaks of the volume. It's showing that the sellers want to enter. They want to make this type of reversals. Or here, look at, you will see that if the volume is suggesting you on this area, look at the volume, there is an anomaly. So what's suggesting? It means they don't want to break the channel. They will reverse from this channel. So volume will give you so much idea about the channel.
Okay.
Okay. Yes. Any other?
Yes, sir. While we receive our position and we understand that market is about to reverse, what strategy you will execute? Means execution of the trade is a difficult part that I feel. Means the channel, I feel okay. Now the buyers are at the peak and the volume is showing a imminent reversal. How
Yes.
much time I take it safely? Should I take trade for 1 minute, 2 minutes, or 3 or what?
So if you are waiting, if you are your trading style is for 1 minute, then you made a confirmation. Okay. When once the channel is tested and channels validate the price to go up, then you can place a 1 minute trade. And now when the price is validating, when the price is retesting from here, okay, like this one. So price is validated to go up. Now you have another level is here. You can expect 2 to 3 candles can goes up. And if you see that the 2 to 3 candles goes up, you can place a 1 or 2 or 3 trades in a row you can place. But when the level is very near, then you wait and avoid the trading. Once the another channel is respected and it gives you the validation for the trading in a down direction, then you can trade. And if you are trading the 5 minute expiry trade, so when this channel is respected here, again on this channel, if you get a rejection and get a interest from the buyer side, then you again can place a 5 minute trade. So the every movement is not more than the 5 to 6 minutes. If you see here from this movement, if we say the 5 minute goes up, and like from here, so in an uptrend channel only call options, don't take a reversal trade. Okay, so that is a very clear thing that in an uptrend only call option, in a downtrend only put option, because you know that in uptrend sellers are very weak, they cannot consecutively made a 5 down candles. Okay, only 3, only 2, only 1, only these type of 4 candles, very weak candles they will made. They will not made a strong candles. When the trend is changing the direction, then they will made a strong candles. Otherwise they will made a weak candles, and these weak candles is a validation that the buyers still they are in a power. Okay, so again when the buyers here they are validating and price is going up, so don't take on the first after first red candle. Once the price leave it, if price goes up, it give you the direction, and you have a 5 minute, you can place a trade, it will goes up. It's even again the 2 to 3 minute market is moving up. So again you get a validation here. So after validation, then you can place a trade. So this type of trading, when you practice on it, then it will be more easy. Maybe you will find so many confusion or queries, then I will clear again these things. Only you need a 2 points, and you can use the fractal indicator. The fractal indicator will give you the first 2 points. When first 2 point is created, then you can understand the trend is now, the channel is now in a developing phase and it's created. And now the market, the price is following the channel. So you can use also the fractal, and first 2 points are your best point. Now, just try draw the fractal here and you will get idea about the fractal, how the fractal is working. Everything is connecting to each other. Look at here. So this point and this point, what is suggesting you? It means the price direction. The sellers don't want to buy, don't want to sell here. The sellers don't want to sell here. You can go with the buyers. So these fractals are suggesting that the price is not ready to go down. The price want to go up. The down fractal always telling you that the price is want to go up. If the upper fractal you will see, it's suggesting that the price want to go down or want to make a range. But we are in an uptrend, only we will take a uptrend signals.
So mostly we see the fractals appear right after we have taken the trade, means this lag behind the market. So how can we judge?
Can you, brother, your voice is very coming slow. You can talk loudly that I can understand.
Fractals appear once the candle is completed, not right at the moment.
Okay, okay.
So how can?
Yes, the fractal formula you understand. Then you will get an idea when the fractal will appear and when the fractal will not appear. The fractal formula is that if the two candles, these two candles are not breaking the low of the third one candle, and the next candlestick is going up, so on this candle you can get an idea the fractal will appear, because there is a gap and the next candle is going in up direction and the next candlestick will goes up and it will not break. So the two candles suggesting that if the after the third candle, the fourth candle, if not break the low of the third candle, then you understand the market is changing the direction. The fractal formula is based on this type of, so two candles goes down, the third one is a lower low, and the two candle goes up. So it's not necessary the fractal will appear, then you take a fractal trade. No, the fractal is just a sign in the market. You get an idea of the formula of the fractal. It's what suggesting that the sellers don't want to continue. The sellers will show you the weakness. They will show you the wick from the downside, and down wick is showing the interest of the buyers. You can get idea from this one also.
Simply, sir, if they don't want to break the lower low, so it means the sellers are not interested. And
yes, the price is not ready to go down.
Yeah.
That is the sense of the fractal. The price is not ready to go down. And up fractal, the price is not ready to go up more.
Yeah.
The price is not ready to go up more. It means that demand is not more than the supply. And the idea about the wow strategy, the wick over the wick, what's the strategy basis? What the psychology of the strategy? I'm going to share with you people here. A little bit understanding, then you will understand. Only the psychology of the pattern is depend upon these two candles. If you see the upper wick in the first green candle and lower wick in the second green candle, so all the psychology of the pattern is based on these two candles. The sellers entered in the market. Again, sellers entered, but buyers controlled the market from here and broke the previous level of the sellers. So in this psychology of two candles, what suggesting? Sellers failed. Sellers are failed. Buyers are more stronger than the sellers. That's why the buyers will continue from here. That's why I'm saying this is a wick over wick breakout. When there is a wick, the sellers was ready to enter in the market. They entered, again they entered here. But now the buyers control the market from here and break the previous high of the sellers, and it's suggesting that the buyers are more powerful than the sellers, so that's why the buyers will continue for the next minute. Same for the sellers. The buyers entered in this candle. It means buyers are interested. Buyers again entered, goes up, now goes down. The buyers failed. They entered, they tried, but they failed from this level. And now this buyer's wick is pushed down. It means these buyers push down now. The buyers are not powerful here. They cannot enter again. So the sellers will continue till they getting weak. So this is these type of psychologies inside the candles, inside the wicks, you need to understand. And with these type of support and resistance levels appearing in the market, here, this wick will give you idea how the wick is giving you rejection. So this type of rejection you will see, like look at. Now here, when you see the rejection, market is moving down more and immediate rejection, sharp rejection. Sharp rejection, what suggesting? Buyers have a power. If the slowly rejection you see, what suggesting? The buyers entering in the candle, but they are very weak. The sharp movement is a power movement. Then you can expect the buyers are interested to go in the, appear in this candle. The next time the buyers, they want to make a candle, but the movement is very slow, then you can expect that they will not enter. If they want to enter, you go with the, you look at the sellers candle, they are stronger than the buyers or not. The previous level is stronger from the buyer side or not, before there was a reversal or not. Only the one candle goes up or not. So these type of things, you need to just to analyze the things. The things are very easy. You just to open the mind and understand the things. If I can understand, I can share with you people. I'm the same like a human, as you are a human. Same mind we have. Everything we have same. Not there is no difference. Just I'm using the mind and just I'm using the logics. You need to understand the logics of the market, logics of the price. Price will tell you when it's going to a weak and when it's going to a strong. These are the simple topics, simple things, simple understanding about the support and resistance. Just to use the information, the correct information in a correct trend. So that is just to use the trend lines, diagonal lines. These are very, very important in the market. The one level you get from the lower rejection, another level is automatically will created. So every time the market will support this level. Today you practice on it, you will get so much easy the points where that market is reversing. Okay, brothers. So I think now all you people practice on it, and always I'm with you people. And next time, if I feel that still there is a confusion, again, I will give you the session and I will clear you more about the support and resistance level. So I think now it's, I'm going to finish this meeting here. And if there are queries, all the members, I'm advise them, write the queries on the group, because there are some members, they are expert in a support and resistance. They have education about the support and resistance. They want to help you. But once you ask the question, then they will help you. They don't know who is weak in a support and resistance or who is not weak in a support and resistance. You show your you express your problems, show problems in a group. Everyone want to help you. Okay? Thank you so much now.
Thank you, sir.
Thank you, bro.
Thank you, sir.
Thank you, brother.
Thank you, sir.